A normal business day in downtown Kampala. Trade experts meeting here believe governments in East Africa are not doing enough to meet the needs of such traders. They also say trade in the region has been significant but not inclusive, largely benefiting big businesses.
Our sense that trade is a 20-foot container from Nairobi going to Kampala has to be replaced by a sense that trade integration is facilitating the woman from Baleke to move her 10 kilos of maize to Kenya without being answerable to anybody.
Participants in the meeting also highlighted the need for investment in critical infrastructure and industries to add value to local products. Coupled with technologies, good roads and rail systems will accelerate not just regional but also continental trade.
We cannot just be focusing on trade that comes into East Africa alone. We need to focus with the same, if not more, urgency on the trade that happens within East Africa, but also that goes out of East Africa.
The forum in Kampala has attracted experts on development and donor agencies who are taking stock of the impact of trade on the East African market. The number one challenge limiting the growth of small businesses in East Africa is access to cheap money, and governments want development partners to increase their support to local financial institutions to encourage them to provide affordable loans. Experts say most banks are reluctant to lend to small businesses because they believe they pose high risks.
We at the African Development Bank are very actively working to help de-risk SMEs and to make them eligible for financing. So we are helping to address this negative risk perception by creating what's called the risk participation agreements.
Risk participation agreements are instruments that allow financial institutions to provide resources to small and medium-sized enterprises. But the African Development Bank bears the risk. However, access to this support requires that 60% of the credit goes to small businesses. Baleke, CGTN, Kampala, Uganda.